Hello everyone, welcome to the market opening bell for Monday, May 19th. First, let's review last week's Hong Kong stock market. Sino-US trade talks agreed to significantly cut tariffs for 90 days, boosting Hong Kong stocks. The Hang Seng Index surpassed 23,000 points, reaching a high of 23,710 on Thursday, the highest since Trump's April 2nd Liberation Day announcement of reciprocal tariffs. On Friday, it closed at 23,345 points, up 477 points, or 2.1% from the previous week, marking 5 consecutive weeks of gains. The Hang Seng China Enterprises Index also rose for 5 weeks, up 1.9%. The Hang Seng Tech Index gained 1.9% weekly. Southbound funds net bought 1.095 billion Hong Kong dollars in Hong Kong stocks on Friday, including China Construction Bank $1.14 billion, Geely Auto 307 million, Meituan 249 million, China Mobile 219 million, BYD 126 million, Alibaba 124 million, and UB Tech 111 million. Net sales included Tracker Fund 1.024 billion Hong Kong dollars, Tencent 774 million, and Xiaomi 654 million. Southbound funds have net sold Tencent for 9 consecutive days, totaling 13.126 billion Hong Kong dollars, while net buying China Construction Bank for 4 days, $3.457 billion, and China Mobile for 4 days, 1.316 billion. Hang Seng Index's company announced quarterly review results on Friday. The Hang Seng Index will increase from 83 to 85 constituents, adding Media Group and ZTO Express. The Hang Seng China Enterprises Index remains unchanged at 50 constituents. The Hang Seng Tech Index stays at 30 constituents, adding BYD and removing Yuewen. The Hang Seng Biotech Index remains at 50 constituents, adding Tongyuan Kang Medicine and Kangji Medical, while removing Corning Jerry Biopharma and Rongchang Bio. Technical analysis, the Hang Seng Index is expected to fluctuate narrowly between 23,200 and 23,700 in the short term, with potential for further upside. Resistance levels are at 23,900 and 24,500, with support below 23,200 at 22,800. The Shanghai Composite Index briefly surpassed 3,400 last week, but failed to hold, closing at 3,367 on Friday, up 0.7% weekly. The Shenzhen Component Index closed at 10,179, up 0.5%. The renminbi central parity rate was 7.1938 to $1 on Friday, up 25 pips, hitting a 1.5-month high. Alibaba Health, Alibaba Pictures, China Light, and Leap Motor will announce results today. CATL set its H-share offer price at 263 Hong Kong dollars. It is expected to announce the application levels and allocation results for its international and Hong Kong public offerings today. Its H-shares will list on the Hong Kong EX tomorrow, Tuesday. CATL's H-share listing is the largest global IPO this year, pushing Hong Kong's IPO fundraising to over 60 billion Hong Kong dollars, over 6 times last year's, ranking first globally. US President Trump said on Friday that Treasury Secretary Bessent and Commerce Secretary Lutnick will send letters to countries informing them of the cost of doing business in the US. He claimed 150 countries want deals but didn't specify which or how many. US stocks rose on Friday. The Dow gained 331 points, or 0.8% to 42,654, up 3.4% weekly. The S&P 500 rose 41 points, or 0.7% to 5,958, up 5.3% weekly. The Nasdaq gained 98 points or 0.5% to 19,211, up 7.2% weekly. The best week since Trump's Liberation Day tariff policy triggered the market plunge. The China Golden Dragon Index rose 38 points or 0.5% to 7,390. Trump's Middle East trip yielded results. Tech stocks performed strongly. Tesla CEO Musk said Saudi Arabia approved Starlink for aviation and maritime use and plans to introduce robotaxi there. Nvidia sold over 18,000 AI Blackwell chips to Saudi Arabia's Humane for data centers. Tesla surged over 17% and Nvidia 16% weekly, both up for 4 weeks. Alphabet and Meta rose over 8%, Apple and Amazon over 6%, and Microsoft 3.7%. After the U.S. market closed, Moody's downgraded the U.S. sovereign rating from AAA to AA1, citing a federal budget deficit to GDP ratio expected to reach 9% by 2035 and a federal debt to GDP ratio of 134%. Tariff adjustments may slow U.S. economic growth short term. Post-downgrade U.S. Treasury yields rose, with 10-year yields nearing 4.5% and 2-year yields briefly hitting 4%. On economic data, the University of Michigan's May U.S. Consumer Confidence Index fell sharply to 50.8, below April's 52.2 and market expectations of 53.4, marking 5 consecutive months of decline and the lowest since June 2022, the second lowest historically. The current conditions index 57.6 and expectations index 46.5 worsened. Inflation expectations for the next year surged to 7.3%, a high since November 1981, up from 6.5%, while 5-year expectations rose slightly from 4.4% to 4.6%, the highest since March 1991. U.S. April import prices unexpectedly rose 0.1%, reversing March's 0.4% drop, as non-fuel price increases offset falling energy prices, indicating persistent import cost pressures. Today, China will release retail sales, industrial production, fixed asset investment, and unemployment data, providing key tariff impact insights. Forecast April retail sales growth at 5.9%, prior 5.9%. Industrial output growth at 5.7%, prior 7.7%. Urban fixed asset investment for the first 4 months at 4.3%, first 3 months 4.2%. April urban unemployment rate at 5.2%, prior 5.2%. Our stock pick today is BrainAurora. Stock code 6681. BrainAurora primarily provides integrated digital therapy software solutions for cognitive disorders in China. It's the first company in China to combine brain science with advanced artificial intelligence (AI) technology to develop medical-grade digital therapy products for cognitive disorders. Its product pipeline covers the assessment and intervention of a wide range of cognitive disorders caused by vascular diseases, neurodegenerative diseases, mental disorders, and pediatric developmental defects. Its core product, the Brain Function Information Management Platform software system, is China's first regulator-approved digital therapy product for cognitive disorders and has been included in the provincial medical insurance reimbursement catalogs of 30 Chinese provinces. The group has helped over 150 hospitals in China establish cognitive centers, including several leading hospitals certified as national medical centers by the National Health Commission. The group's core product has been commercialized for 8 indications across 4 major types of cognitive disorders and is under development for other cognitive disorder indications. Additionally, 3 products have received regulatory approval in China, 1 in the EU, and 6 candidate products are at various stages of preclinical clinical development or registration. Cognitive disorders refer to deficits in neurocognitive domains, leading to cognitive decline, primarily caused by vascular diseases, neurodegenerative diseases, mental illnesses, and pediatric developmental defects. Traditional pharmacological therapies may be ineffective or unavailable for cognitive disorders caused by these conditions. Digital therapies for cognitive disorders serve as assessment and intervention tools, utilizing cutting-edge technology to provide tailored solutions based on individual patient needs. With a growing number of people affected by cognitive disorders, the market for digital therapies for cognitive disorders is experiencing significant growth and is expected to continue expanding. Recommended buy price 6.5 Hong Kong dollars, target price 7.2, stop loss 6.15. I do not hold the above stock.